For more on what's happening here, let's bring in senior business correspondent Peter Armstrong. So Peter, put this into context for us.
Yeah, because the context matters, right? The dollar fell, but it fell 0.35 cents today. Look back to where the dollar was this time last year, right around 75 cents. So the question, to me at least, is less about what happened today and more about why the dollar has weakened so sharply over these last 12 months. And there's a bunch of reasons, but kind of two main ones. The first is what they call interest rate divergence with the United States. It just means rates are higher, the economy is growing faster in the United States. We've been cutting rates at a faster pace than anybody else in the G7. So investors look at that and say, you know, they can get more return on their investment by buying US dollars, so that's what they do. The other main reason, though, of course, is tariffs, right? Trade with the United States is just so deeply important to the Canadian economy that even the threat of Donald Trump sweeping tariffs weaken the loonie further. I was here just last week talking about what those two forces coming together could mean and could it break us through that psychological barrier of 70 cents, and here we are. The other sort of added context here is the chaos and uncertainty of yesterday's events in Ottawa certainly didn't help matters, but it is important to say that this is bigger than just a one day or one event thing.
All right, so how low should we expect the dollar to go?
Look, I've heard from analysts who said they expect the dollar to go as low as 68 cents. More to the point, they don't see much that can really turn it around, so lower for longer. And I can almost hear the gasp of anybody planning a trip or planning to buy products in US dollars. But remember, it's bad for them, but a low dollar is great for exporters. If you sell Canadian oil, if you sell Canadian wheat or steel or lumber, this is very good news for their bottom lines as well.
CBC's Peter Armstrong. Thanks, Peter.
You bet.